Good morning, everybody. It's Friday, September 15th, 5:28 a.m. Central Time. Mixed trade in the grain markets this morning. It's pretty quiet. Brian Split, Mackenzie, good morning. Guys, why don't we start off with export sales, which were out yesterday?
So, U.S. corn export sales declined last week. Net corn sales of 753,300 metric tons for the current marketing year were within the range of expectations, but down 21% compared to the previous week. China was the largest corn buyer, which we haven't seen for quite a while. Net soybean sales of 703,900 metric tons were also within the range of expectations, but they were down 61% compared to last week. China was the largest soybean buyer for the week. Net wheat sales of 437,900 metric tons were the highest in 5 weeks and up 18% compared to last week. Mexico was the largest wheat buyer.
Okay, so China was on the corn sheet. However, this is old business that had mostly previously been reported as unknown destinations. So it's not new China buying. Brian, we hear a lot of people like complain and say the analysts are saying there's no demand, but yet I've got a good basis bid or whatever. When we're saying, and I'm not saying corn demand in general sucks, I'm saying corn export demand sucks. This is, and from China in particular. So this is a chart I threw together this morning. This is U.S. corn export sales to China, accumulated commitments, and it's seasonal. So the last 3 years, 2020, 2022, 2021, we had a lot of Chinese sales on the books at this point in time. 2023 to this point, we've got like nothing. The grand total that we've sold to China is 22 million bushels. Last year, it was quite a bit larger than that, 133 million. 2 years ago, it was 468 million. So as it stands right now, Chinese purchases of U.S. corn are back to where they were, like basically pre-COVID days, which is basically zero.
Yeah, right. So before COVID, China really didn't buy much. They had African swine fever, and they needed to really replenish the herd. Then COVID happened. Corn got really cheap. They bought a lot of it. And I think the mistake that the USDA made was that they were assuming China was going to continue to buy at a similar pace to some of these really strong years, and that has not been the case.
They still
Uh,
could.
they still could, right?
We're
I mean,
not saying they
there's a lot
won't,
of time
but they
left
just
in the
haven't.
marketing year, but
Yeah.
we're not at the pace right now that we need to see to really compare to those years at this point.
But if you look at the last couple of years, like a lot of the business, the years that they did buy, a lot of the business had already been done before the marketing year already started. And then this only goes through February of next year, but a lot of the business had already been done. So I don't know. I mean, I know China's got crop issues. They've had flooding or excessive rains up north, that sort of thing. This they could still come in and buy corn. They just haven't yet. When it comes to soybeans, to go back to this, soybean commitments to all destinations for this marketing year are off 24% versus last year. That's an 8.6 million metric ton deficit. And China's deficit in terms of U.S. soybean purchases versus last year is 6.5 million. So China is also the reason why soybean purchases are not quite where they need to be. Do you think USDA was justified in its export cut this week?
I mean, yeah, the pace analysis which suggests it's okay, and then of course with the crop getting smaller, they do have to address the opposite side of the balance sheet, which is their typical protocol. So I'm not going to argue with that at all. And the thing is if you think back just kind of anecdotally to other years, yes, China's been buying beans, but they're these really small purchases, a couple boatloads here, a couple there. We're not getting that, hey, China just came in and bought 700,000 tons of beans, which we've seen in previous years, and that has not happened yet.
It could still happen for corn, could still happen for soybeans. It just hasn't happened yet. Guys, real quickly before we jump to weather, yesterday's premium video was so damn good that I've got to tell you about it. Act now to benefit from sustainable aviation fuel. Paul Neiffer was on. He's a regular contributor now. Guys, if you're not listening to the things that Paul is telling you to do as it relates to preparing for SAF, carbon scores, that sort of thing, you have to watch this. If you're a corn grower in the United States and you don't watch this video, quite honestly, I feel like you're missing out. Go to standardgrain.com, sign up this morning, $50 per month. I will send you over that video as soon as I see your registration come through. Cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. Guys, our list of contributors is absolute dynamite. Paul's on, Brian, you and Matt are on the premium stuff. Chris Barron and Shay are on. It's really gotten really good here the last few months in particular. So check it out.
Scattered showers fell over portions of the U.S. this morning. Light rains were observed in areas of Texas, Oklahoma, Kansas, Nebraska, Minnesota, and Wisconsin. While rainfall over the next 7 days appears to be limited, longer term forecasts indicate a wetter trend. The 10-day Euro model suggests widespread coverage throughout key areas of the northern Mississippi River Valley. The extended GFS through October 1st mostly confirms the wetter forecast. The river is at 9.2 feet below normal at Memphis here this morning. Despite a wetter forecast, government projections indicate a fall to levels near last year's record low by the end of the month.
I don't know anything about how like what rainfall amounts correlate to what river level, but it looks like there's some relief in sight. To get back to just rain and conditions in general, Brian, are you hearing any early yield reports?
Yeah, had some reports yesterday of corn coming in Iowa. This would be East Central Iowa, about 40 bushels less than that last year, which was a really
Ooh.
great crop last year for them. So disappointing. I've got some clients in Missouri that are ecstatic with their corn yields. Maybe not a record yield for them, but not far from it. And Ohio has been extremely pleased with their yields thus far. Haven't really had anybody into beans yet. They're probably 8 to 10 days out from that. So I'm really anxious to see what those reports look like.
As a rule, I generally don't talk about yield reports on the show because I feel like everything I hear is so like anecdotal. I know that I hear more about the bad stuff than I do the good stuff, and I feel like I just even as much as I hear on a daily basis, I feel like I cannot get a feel for exactly what's out there because I feel like the reporting is slanted. You hear so much more about what's bad than you do what's good. And there are good crops out there, guys. I know that a lot of places had issues with drought and that sort of thing, but there are good crops. Let's jump to this India story.
So, in an effort to reduce prices, India plans to lower the amount of wheat stocks that traders, wholesalers, and big retailers can retain. The allotted amount will be reduced to 2,000 tons, which is down from 3,000 tons. India will also release more wheat stocks into the open market. The country, however, has no plans to abolish the import duty on grain. India's wheat prices are currently at their highest level in 7 months.
This was seen as being a little bit bearish because there had been some thought that India may do away with this export or import tax rather and import some wheat from Russia or elsewhere. But now it looks like that's a no-go.
Yeah, it's one of those things where they're releasing it into the market currently. But at some point, maybe this turns into a friendly story if their domestic stocks do dwindle down in an effort to reduce domestic prices, which then means they're going to have to either replenish those supplies at some point with another domestic crop or come back in and be an importer, which India can go back from importer to exporter. And let's remember that like when Russia invaded Ukraine, the world was really depending on India to step up to kind of fill that gap as an exporter. Right now, I mean, this wheat chart just it's tough. We had a nice rally after that report, but we went to resistance on the KC wheat. We showed that in the premium video on Monday where those levels were. And thus far, we just haven't been able to get through them.
The wheat situation as it relates to the report that was out this week, that was the lone friendly item was the world wheat numbers. And the world wheat situation, I think stocks to use is, I believe it's projected to be the tightest since 2014. So it is pretty tight globally. In the United States, it doesn't feel that way because we're not selling much on the export market, but it is pretty tight. We've got a crush report this morning.
Yeah, so NOPA will release August crush data here this morning at 11 Central Time. The U.S. soybean crush is expected to increase month over month in August, but decline on a yearly basis. NOPA members are estimated to have crushed 167.8 million bushels last month. The estimate implies a daily crush rate of 5.59 million bushels, which is up slightly from July. Soybean oil stocks at the end of August are forecast at 1.48 billion pounds, which is the lowest in 4 years.
I'm super optimistic about crush, as are a lot of people. What say you, Brian?
Yeah, you almost have to be. I mean, we just know what the expansion initiatives are and with the renewable diesel initiatives, with what Mackenzie just mentioned about soybean oil stocks. This is all stuff that we need to get these initiatives going big picture. And I think it's very evident that the current administration is really trying to force the green agenda. I think you have to be friendly crush.
Yeah, you've got to be super optimistic. The margins are great, and export sales aren't that great. So if we're going to ship less beans out of the country, what are we going to do with the remainder? Well, the processor's making a ton of money, so they're going to crush beans at near capacity, I would imagine here, and it's going to tick up after new crop beans become available. Certainly, the way that looks to me.
U.S. oil prices continue to trend upward. On Thursday, Brent crude climbed to a 10-month high, closing at $93.70 per barrel. West Texas Intermediate ended the day just over $90 per barrel. That was its highest close since November of last year. WTI has increased almost 3% just this week, and on the year, prices are up 13%. Oil production cuts by Saudi Arabia and Russia are driving the price increases, as the cuts are expected to cause a significant supply shortage in the fourth quarter.
Brian, you are a man of charts. What does this weekly crude oil chart look like to you?
Right. So I would just kind of focus on the late 2022 period into the very early Q1, Q2, 2023. So we had made lows around that 65 area. We had made highs just under 85. So my initial thought is to take roughly a $20 range and extend that forward above the 85 area. That suggests probably a push up to 100, 105. And I think if you look at some retracements of the whole move, that would be about a 50% retracement is just above 100 in that area. So this market looks like it broke out here of a very sideways consolidative pattern that took a while. And as of right now, I think these are some of the largest production cuts we're seeing from OPEC in non-recession timeframes.
Yeah, gas prices are ticking up. National average gas price was 387 yesterday, which is actually about flat versus a month ago. I still think that they're going to catch up even further to oil prices. Diesel prices are actually still down versus a year ago, but also on the have been increasing here as of late. So you could see some more pain at the pump, as they put it in the news on Sunday evening or whenever.
The producer price index has climbed to its highest level in 14 months. U.S. wholesale prices surged 0.7% in August, the largest increase since June of 2022. On a yearly basis, wholesale prices rose to 1.6%, which was up from 0.8% in July. Energy was a key contributor to the increase. Wholesale energy spiked almost 11% last month compared to July. The Fed is still expected to hold rates steady at its meeting next week. The markets reacted positively to the report. The Dow Jones gained 1%, the S&P climbed 0.8%, and the Nasdaq also climbed 0.8%.
Treasury markets indicate that there is a 97% chance that there will be no hike next week. Then there's no meeting in October for the Fed. In November, there's now a 35% chance that we'll see a quarter point hike. I think higher for longer is the trend. And Brian, these interest rates, we've done a lot of stuff with this in the premium videos, but the interest rates change a lot of things for farmers, not just operating money, but like your ability to store grain. What does it cost to store grain? It's really changed the ball game. And some people, even if you've been farming for 15 years, you haven't dealt with rates like this because we haven't had them since 2007.
Right. Yeah. So this could affect how much carry develops in the market.
Yeah.
Interest rates are a big part of that, as you mentioned, the cost of carry. And so, like, one of the things that we've seen here recently is if you look at the spread between September and December corn, and it's in delivery. September is going to expire here very shortly, but that spread traded out to like 28 cents.
Yeah.
Which I cannot remember a time when that spread traded that wide, and I just don't think that is a good sign in general as far as the if you're trying to be bullish this market. But that also suggests that we could see some carry levels, D's to July, D's to March, any of these spreads that are wider than what we remember seeing in the last 10 to 15 years.
Yeah, a lot of times, like from a seasonal standpoint, your spread markets like D's to March, D's to May corn, they tend to bottom out or offer the most carry around this time of year. It's like mid-September to October, but this year could be different. We've got these river issues. We've clearly got a demand problem. We've got this interest rate situation. I don't know. Cattle had a hell of a day yesterday.
They sure did. We saw multiple new highs in feeder cattle contracts. Feeders closed an average of 324 higher. Live cattle closed an average of 254 higher. We have had a little bit of cash cattle trade this week. Up here in Nebraska, cattle have traded around 186.50, which is up about $2 compared to last week. In the Western Corn Belt, cattle have traded right around 184, which is steady with last week. Box beef ended the day on Thursday at 306.37. That was down $1.18. Select ended the day at 286.86. That was down 33 cents.
We haven't quite seen a $200 print on the live cattle board yet, but that April contract for next year was, I think, within $1.25 yesterday. So you could see that as early as today. Outside markets this morning, U.S. dollars off just a little bit. Stocks are marginally higher. Bonds are off. Crude oil up again, up 35 cents in the October WTI at 90.51. Brian McKenzie, have a great weekend. Talk to you guys next week.
All right. See you.